My name's Danielle. I'm a private wealth manager with Select Investors. We focus on tax and wealth planning. My main passion is empowering and helping my clients in Singapore navigate through market volatility to help them with their long-term goals. So I always try to educate them that short-term volatility does not mean that that will be the case in the long run. So it's really important to focus on long-term planning, having a diversified portfolio, and holding long-term to be able to weather that volatility. I do quite a lot of educating, I would say. So I write a blog for a website, and I've just started a podcast all about, kind of what I stand for in terms of, the key investment topics of diversification and holding long term. I also use software that will help them kind of look at their portfolios, do projections, so that they can see that in the long term, no matter their short-term volatility, they'll be able to weather that storm, so long as it's within their risk tolerance. I also think it's really important to share real-life examples with my clients and help them understand that diversification really is key. You shouldn't leave all your eggs in one basket, because if something happens to that basket, then everything will go wrong for them. I think risk tolerance is really crucial, whether that's within the client's risk profile to be in high yield bonds. Especially nowadays, we're seeing that investment grade bonds have a lot more controlled volatility, but still has access to higher returns within the bond market, similar to high yield bonds. So that is always a really important assessment to make, whether it's even worth having that or being overweight in that in their portfolio. I would never recommend just one type of investment. As I mentioned before, that kind of goes against diversification. So it's really important to look at what the client is looking for. So if they have a particular interest in certain areas, then we can look at a core satellite approach, where the core portfolio is there for long-term growth, with satellite funds maybe appealing to their personal preferences. But I do think it's really important to go for either a managed or a discretionary portfolio, so that you have professionals or fund managers that will be able to give you advice on these areas. Commodities are really good for hedging against inflation. We've seen this in the past. However, they can be quite volatile. So going back to the risk tolerance again for the investor, it's best to see, is there other things that are going to be there to help hedge against inflation that might have a little less volatility, such as investment grade bonds. So commodities can outperform inflation, which is, I think, what people are really looking for in today's kind of market uncertainty. But there can be other asset classes that will also do the same, but with less volatility and providing higher profits. The first is definitely meeting other professionals in the same area as me. I think it's really refreshing and comforting to speak to them when we have kind of the same opinions about the same topics. The second would be finding out more about FX. Whilst this is kind of adjacent to the sort of things I do, it's not something that I put regularly in my clients' portfolios. I think sometimes a lot of clients can be quite apprehensive about FX. So it's good hearing from the professionals so that I can gain confidence and also share that confidence with my clients.